Hey guys, welcome back to Beat It. I know this is not the usual setting, but my uncle is sick and my other uncle is busy. So I've taken it upon myself to keep putting out content to you guys back at home. So today, without further ado, I want to talk about a topic which our editor had brought to our notice. His name is Rupesh, and he was going through the news source called Live Mint, and he found this interesting article, which I'm sure Rupesh will now put up on screen, which talks about whether one should be considering Varun Beverages. What is Varun Beverages? None of you might have heard of it. You guys might be wondering, what is this company? What does it do? If it's a beverage company, one can venture a guess that it probably relates to some FMCG line of goods. And you'd be right. So, Varun Beverages is the company which is a franchise of PepsiCo. So, all the PepsiCo products and the entire product line that we consume today in India is most probably supplied to you by Varun Beverages. Varun Beverages not only supplies Pepsi, Mirinda, 7 Up, all the products, but also it supplies fresh fruit juices like Tropicana and Aquafina, which is the bottled water company that they have. So there's another drink called Gatorade, which is supposedly marketed as a sports drink, though I suppose it has too much sugar to be considered a sports drink. But however, you have these sort of drinks which are part of their repertoire. They also have certain products which they themselves produce, like Fresh, which is one of their beverages which they market. But mainly it serves as a bottling company. Varun Beverages was incorporated in 1995 by Ravi Jaipuria's son. Varun Beverages also owns a few other franchisees of PepsiCo that it had acquired over time, and these franchisees include countries such as South Africa, Zimbabwe, Ghana, Nepal, and even Sri Lanka are some of the names which are part of the areas that Varun Beverages serves, and in specific PepsiCo products in those areas. However, what's interesting about this company is not alone that it's a franchisee for PepsiCo, but rather the fact that the stock price has made an remarkable recovery since its COVID lows. So in COVID, as the editor will now put up on screen, the stock was trading at about 55 rupees per share. Today, the stock is trading at 652 rupees, which is a remarkable jump in terms of its price within a period of 4 years, which is why the stock was covered in the LiveMint article. However, before people get excited and decide to jump in on the Varun Beverages train, we need to look at a few key points. The first key point is that Varun Beverages is not an owner of PepsiCo, does not have a stake in PepsiCo, and as far as I know, PepsiCo does not own Varun Beverages either. It's merely a company that a few Indians had started together in order to be able to import PepsiCo products to India back in the 90s. And they have taken that idea and they ran with it. So today, the success that Varun Beverages is seeing is not because of some inherent ownership tie with PepsiCo, but rather just, let's say, a franchisee agreement with PepsiCo. What this implies for Varun Beverages is that there is this concept known as a royalty to be paid to the parent company, or rather the main company which is licensing you the product and allowing you to sell PepsiCo beverages. The royalty is a huge sum of money, which is a drain away from the free cash flow a company is able to put out. So, in an ideal world, you'd want to have a company that is spewing as much free cash flow as possible. For those of you who are uninitiated with what free cash flow might mean, it basically is your net profits minus capital expenditure. That is the amount of money that you'll need to sustain the business going forward. And the rest of this money can either be used to pay off in dividends, buy back stocks, be used for further expansion. There are multiple other uses for this free cash flow that one can think of. So think of this as the extra nutrients that a company is able to acquire, and these nutrients are important to be able to augment, let's say, muscle growth and bone density and all the good things that come with good food and exercise. So if you stop this passage of nutrients to a company, you basically have a company that doesn't grow or at worst starts receding or declining if it has negative free cash flow. So when we look at the royalties which Varun Beverages owes PepsiCo, it's 14% of net revenues. It also owes PepsiCo 8% for something known as concentrate costs. It also owes PepsiCo around 6% on marketing which PepsiCo does for Varun Beverages. And this marketing which Varun Beverages benefits from in places like India. This marketing, when you see Dhoni coming on, and you see other cricketers like Sachin, Dhoni, and you see different newspaper billboards, or maybe you see advertisements in between IPL games. All this is paid for and has to be paid for by the franchisee that's benefiting from the advertising that's happening. So Varun Beverages has to pay out of their pocket for this as well. Right. So now let's explore the financials of Varun Beverages and let's see what it has in store for us. When we look at the financials of Varun Beverages, there is both positives and negatives which one can look at. And if you look at the profit and loss statement of Varun Beverages, you can see that dramatically over the past 4 years, they've made a huge climb in profits, net profits, and this is definitely a positive sign. However, the keen observer will also note that even though profits have increased, one can see that their debt has also increased. If you look at the reserves to debt, in which our editor will put up on screen right now, you can see that it's almost equal. So when reserves and debt are equal, it basically means that if there comes a case where the company is insolvent, then if the company is insolvent, they are unable to liquidate their resources adequately enough to be able to pay back what debt they need to pay back. And it's generally seen as a yardstick of too much leverage. And we all know the downfall of leverage. We all remember the story of Anil Ambani, and we remember the story of Vijay Mallya. These are enterprising entrepreneurs, the sons of India, who basically had empires which they wanted to expand too quickly by taking on a lot of loans. And during the first sign of trouble, the credit calls came and they were unable to pay back their creditors. And today, their legacy remains tarred. And none of us think back on them fondly, but rather see them as the villains of Indian business stories. However, I'm not suggesting that Varun Beverages is anywhere close to that position. They have a robust and AA plus credit rating certified by CRISIL, and that is the most recent rating that I'm able to find. So this seems like a positive bit of news on that. However, for a value investor, one must keep in mind that they should probably avoid companies with high debt. And if you look at the promoter holdings, it seems quite stable, and that's a good sign for a company. And if you finally look at the valuation, this is the most important aspect when we look at a company like Varun Beverages or any other company. And because it's an FMCG company, it gives us an easier time at analyzing it compared to analyzing, let's say, an IT company, which has very little assets in terms of hard assets like production lines or the product which they're selling. Mostly the assets which these companies have are mostly in intellectual properties or in other technical or service based assets which cannot be very easily valued in the open market. However, Varun Beverages is easier to value, and thus we shall venture forth on trying to value Varun Beverages. If you look at the book value of Varun Beverages, it's much lower than what the price is trading at. So there is no hope of trying to find a stock that's trading below book value. Generally, Warren Buffett and Benjamin Graham try to identify companies which are sometimes trading below their book value, and this acts as a way of trying to figure out whether the company is a cigarette butt, which basically means that a piece of a cigarette that has 1 to 2 last puffs in it, that you could take those puffs for a profit for free and move on. This is not one such company because, of course, the growth is high, the company has performed well, and it's commanding a king's valuation in the market. If you look at the PE ratio, it's I think above 80, which is quite high for a company such as this, though the growth has been phenomenal. There is a ratio known as the PEG ratio, which factors in growth along with the PE ratio. And we basically see that even the PEG ratio tells us that this company is on the side of being overvalued. So even those who want to factor in growth will have to concede that such a company is slightly on the end of, or not slightly, but rather on the end of being overvalued. And I've already mentioned some of the downwinds, or rather the headwinds that this company is facing. One, in terms of the cost structure with royalties to be paid compared to other FMCG companies like, let's say, PepsiCo abroad. If you were to buy PepsiCo in the US, PepsiCo in the US is not paying royalties. In fact, it is exacting royalties from its franchises all over the world. And we see that PepsiCo, that's listed in the New York Stock Exchange, and I'm sure those of you at home can follow me on this and go right now and check it out. As of the time of recording this video, PepsiCo has been trading at $150 per share, and the PE ratio is at a much more moderate level of 22. So if you truly think that PepsiCo has room to expand and there's going to be great strides made for the PepsiCo brand and beverages, you might as well consider investing in PepsiCo abroad rather than Varun Beverages in India. That being said, some of you might argue saying that, look, Sashwath, this company is growing at a much faster rate than PepsiCo abroad, because PepsiCo abroad might be tied with other assets that one might not want. Whereas India is a growing market, so you might want to invest in Varun Beverages, which is that one particular portion of PepsiCo that is operating in India and other growing economies. I would say kudos to you, that's a fair analysis, but I have to still say that a 12% draw on net sales is too high to justify in order to be able to purchase such a company in India. And for that same reason, I have written a piece along with my uncle, and I'd written it, I think, 2 years ago, which was for The Hindu, where we basically analyzed how you'd be better off buying the parent company rather than the subsidiary which is listed in domestic markets. For example, Hindustan Unilever as opposed to Unilever PLC, or if you want to take Nestle, then take Nestle. You can take Procter and Gamble, Gillette, multiple different examples where you can invest in the good business that you believe in, that's underlying the business here, by investing abroad in the company that you truly want to buy the products of. That being said, it's up to each of you as investors to take a call on this, but I personally do not see the sort of indications and hype which is going around in the market for PepsiCo. And once again, I'd like to suggest that those of you at home who disagree with me can put it down in the comments below, because today I don't have my uncle to give me a counterpoint or a counter perspective. So I'm relying on you, the audience, in order to be able to give me a counter perspective on why you might consider buying Varun Beverages. That being said, none of this is investment advice. I'm not a SEBI registered investment advisor, and I would suggest that you incorporate a SEBI registered investment advisor in your investing journey, and I'm sure that they will be able to guide you much better than anything online or anything that you will be able to find in other resources and mediums. That being said, I thank you for watching this video. If you liked it, please hit the like button, and please share it with your friends and family who you think might enjoy it, and do subscribe if you haven't already. With that being said, I thank you once again for joining me on Be Rich. Thank you. Hey guys, that my uncles Varun Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.